Can Forex brokers manipulate price? The question of whether Forex brokers can manipulate prices is a complex one, and the answer is not straightforward. While there have been instances of market manipulation in various financial markets, including Forex, it's important to understand that the market is highly competitive and regulated. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. The sheer size and liquidity of the Forex market make it difficult for any single entity to manipulate prices significantly. There are countless market participants, including banks, hedge funds, and retail traders, all competing for the best prices. This makes it challenging for any one player to exert undue influence. Furthermore, Forex markets are subject to strict regulations imposed by various financial authorities. These regulators have rules in place to prevent market manipulation and ensure fair and transparent trading practices. While there have been instances of manipulation, they are relatively rare due to the robust regulatory framework. Potential manipulation tactics in the Forex market include pump and dump schemes, where individuals or groups artificially inflate the price of a currency pair by coordinated buying, followed by a sudden selling to profit from the inflated price. However, such schemes are difficult to execute in the large and liquid Forex market. Another potential manipulation tactic is spreading false or misleading information to influence market sentiment and prices. While this can be done in any market, it's particularly challenging in the Forex market due to the abundance of information and analysis available. Additionally, some brokers may attempt to manipulate prices by routing orders in a way that benefits them or their clients. However, this practice is closely monitored by regulators, and any evidence of manipulation can lead to severe consequences. To protect themselves from potential manipulation, traders can take several steps. Choosing a reputable broker that is regulated by a reputable financial authority is essential. Diversifying your trades across multiple currency pairs can also help reduce your exposure to any potential manipulation. Staying informed about market news and events is crucial to identify potential manipulation attempts. Be skeptical of any unusual price movements or market rumors, and conduct your own research to verify the information. While the risk of market manipulation in Forex trading exists, it's important to note that the market is generally well regulated and competitive. By following best practices and being aware of potential manipulation tactics, traders can help protect themselves from such risks and ensure fair and transparent trading.